All right, it's time for part two. Time for part two. So over here, I already have last month the high and low lockdown. So let's just get started. So as we know, last month began on the 1st of November. It was actually very nice because it was also the beginning of a week. Now, I will say this again. Go watch the video on the weekly structure. I did refer to it on the previous video on Euro USD. So I'm kind of gonna fly through this. So once again, here we have our first 4 hour candles, our weekly range. And over here we see we had a bullish open. That means our open sentiment for the week was a buy. We had a buy indication. Now, same thing, we knew that this was a no trade zone the previous week. Let me just confirm when that was exactly. So the previous week, October to 25th, 26th. 25th, 26th was over here. Just gonna make this yellow. And this was a no trade zone because obviously you can see our levels didn't hold. And notice how usually end of month this is what happens. It's a thing that do the same thing over and over again. Now, same thing over here. You usually have some type of pattern to induce retail traders. In this case, here's our trend line. I hope you guys are also are taking note what I'm doing when I draw trend lines. Hey, and there we have it. So whoever sold, yeah, they were killing it. Whoever sold, they were killing it. Now, this is where it kind of gets tricky. Okay, this is actually a very nice setup for retail traders as well because the move presented as expected. Now, I just want to go back on the line chart here real quick so I can show you how we basically had this peak formation high over here. And I just want to confirm my level count. I don't want to confuse you. Okay, so this is correct. So technically speaking, this was our peak formation high. This was our level 1. This was our level 2. And this over here was our level 3. Right? So notice how they form that type of pattern. Now, before we do that, let's just have a look at the level at which this low was formed. Now, this was the low of the previous week. I'm gonna make this a different color so we don't need to get confused. Oh, actually, just give me a second so I can double check what I used for Euro USD. Okay, I'm gonna use a white line for it. So for last week's low, I'm gonna do it like that. And so here we actually have last week's low. So as you can see, it makes sense why we had this bounce. So here we literally had a liquidity grab, and liquidity grab. And notice also how on Monday, the spike went much lower at this point because this was the actual low, right? Now, your entry should have been somewhere around, or not your entry, but if the entry did present itself on the 15-minute chart, then this is your W formation. I mean, it's crystal clear on the trend line at the low of the week. Also with the indication of your open sentiment. Now, we also know that since price is going up, price broke to the upside where they potentially have that 1, 2, 3, 4 candles we're looking for. So if you did buy from this point, your first take profit. Okay, let's see your entry was at the low, maybe around here. Your stop loss would have been. I mean, this is GBPUSD. The pay is really volatile, so obviously you can have a big stop loss. So let's say you have like a 40 pip stop loss to the high of the week. That's 266 pips. That's risk reward 125, 124. That's not bad. Now, if we also look at it from another standpoint, if you entered all the way, Here's your level 1 consolidation, right? Here's your level 2 consolidation, level 3. So it makes sense why price dropped from here. But that's just a simple level count. If we go back to our using our initial move or initial approach, here we have a nice, here we actually have a setup which presented like we expect. We had a breakout to the upside. We know in the information high breakout candle, we have 1, 2, 3. Technically speaking, that's your information, you know. So you enter after a visible stop hunt. So maybe you would have taken the trade maybe around this point with a stop loss over here. Maybe you would have been stopped out like, okay, let's say you entered around the zone, your stop loss would have been maybe 30 pips, you know. But like if market makers, if you only got stopped out once and you re-entered, you still would have made back the money, you know. I mean, you won't always win. That's just the psychology now. You know, I'm teaching you guys also. So you still would have made back what you lost initially, you know, and then obviously just come back tomorrow. But let's just do a simple level count. Let me just see what's happening here in the bigger picture. Okay. So once again, this was a nice move to the upside because if you put it on a line chart, this is our low of the week. Like I said, I will make this white. And as you can see here, we had that bounce at the low of the week and also a bounce to the water. And another thing which could have confirmed this move was actually the fact that if I actually just look at my calendar again just to confirm something, okay, October 25th to 18th. So the other level was on the 15th. Let me just confirm where exactly it was. Because over here, now if you look at the week before the previous week, this was that low. So you can see how that correlates with that, you know, so that could have been a reset. That's a highly potential reason for a reset. So that means here we had the crossover, so that's level 1 consolidation. This could still be level 2 consolidation, right? So this now becomes that stop and low rise, right? So that's how you could have taken that move. And also our open sentiment of the week did indicate that we're going to have a buy. So this makes sense why price went up. So I'm just going to move last week's or the last month's high since we now have a new high, but I'm going to put it on a line chart so it's actually the accurate support and the resistance. Right, so as you can see, high, that would have been your entry. Or if you waited for a valid stop and like that would have been a nice confirmation count to enter and trade. Next week, once again, we follow the same method. Look our first to 4 hour candles. And our open sentiment this week was once again a buy, a bullish candle. And we didn't really have a breakout as we expected. But as you can see at this point, we put it on a line chart again. Notice how this point over here is slightly higher than this point, right? Because obviously, once again, this over here was a money grab. So whoever was too impatient for the move and they bought in too early, that was most likely why we saw price drop. Because I mean the market has to move up and down in order for supply and demand to move. And that's your information. Technically high of the week, high of last week. This is your first, basically this is the first 2 weeks of the month. So also technically this is still 1, 2, 3 levels of rise, right? So this is your information. So it makes sense why you could have sold. Now, that's why I always also say, remember there is a micro pattern within the macro pattern, right? Now, once again, this is your W formation. Our open sentiment was a buy. Now, here we had a pin to the water during the week. So Me personally, I would say I would have taken the sell, take profit here, 70 pips, take profit two at the water, 100 and okay, 200 pips. But I probably would have only hit take profit one and just stopped at the entry point, and I wouldn't have came back to this trade. So like this is one of those weeks where you wouldn't make so much money, but you're following it week by week. So it's not really like you miss out on any move. You're just reacting to what the market is giving you. Now adjust it again because since it's a now this is your new high of the month, second candles, and here we have our first 4-hour candles. And once again, our indication was bullish. So we had an indication that price is going to go up. Now, the ideal way to know how this move happened or how it or how you could have taken this move was this breakout, right? Remember this high, because now technically this is resistance, right? So now price has broken resistance and is now bounced off support. So resistance has now become support. You guys remember that anomaly of retail traders. Now, I wouldn't just take this move on a Monday, especially not on a Monday because it's pre-formation high, so I wouldn't sell from here. So what I would then do is I would then wait. So here I see one bounce. Here I see a second bounce. On Friday, I see a third bounce. So the third bounce would be my buy. And it makes sense why I would have taken the buy here because number one, it's fake move end of the week. So why is it dropping? And it's been in the range. You get what I'm trying to say? So on Monday, I would have been in profit. I would have taken profit at the high of the week, which is obviously around here. I would have taken 100 pips. Stop loss would have been about 44 pips, 33 pips, around that range. Risk reward 1 to 2, 1 to 3, not really decent, but I'm just giving you the psychology of what happened behind the move. So this is one of those choppy, like I said, if you took the entry here, like you would have been in the money the whole time. So you would just have been following and following and following it, right? So I'm just breaking down week by week. This is your new high of the week or high of the month. And here, once again, now we can go back to the macro type of perspective. Now we can start counting over again. Now we can start counting. That's one, W formation, level one consolidation, level two consolidation, and obviously since price broke this point, now this is level three consolidation, P formation high. But also, okay, there's one thing I didn't explain this week. So here we had price form a new high. So midweek reversal, this was probably on Tuesday, Wednesday, Wednesday, Thursday. So it bounced off the high of the week. And once you can also see, let me just zoom in. As you can see, we had 1, 2, 3 bounces to the high and price dropped. So initially, like this would have been your trade for the week. I'm really sorry that my apologies. I wouldn't have taken the buy if I saw this. First TP would have been 69 pips. Second TP would have been 120 pips. But TP would have been second TP would not have been hit because obviously price didn't reach the low of the box. Now, if we go continue, we have our first 4-hour candles once again. This week ends on the 6th, 7th. Okay. This week ends here. Now, this week indicated a buy for us, so it makes sense why price went up at this point, at the low of the week. But initially, we peak formation high, so we're only looking for sell, technically speaking. But open sentiment was a buy, so it showed us to be mindful of price going up. So it makes sense why this happened. And if you actually look at this, what's happening right here now at the moment, doesn't it also look familiar to what's happening here right now? They do the same thing over and over. They do the same thing over and over. So initially our move for the week here was as well was a breakout to the upside. We had 1, 2, 3 candles to the high information, right? Information that would have been a sell, a nice selling opportunity. I know some of you caught this trade. I know some of you caught that sell. That was beautiful. That was a nice 80 pip, 90 pip drop. So that's our new high of the month. Now we actually have a full cycle now that we followed it. And as we can see, technically speaking, we have two trails of rise, or if you have the same, or you can actually see the same pattern more or less. You can either see this as a W, V, V, and then, obviously M, macro M, or you can see it as W, and you can only start counting the V here or the V here and then expect M, right? So it's just psychological. It's all the matter of, like, it won't always be on point 100%, but it's a matter of knowing what's going to happen. That's all that matters. Now, I'm just going to actually move this because this is technically our high of the month over here. So what we can expect on GBPUSD, seeing that this is technically also actually, let me just look at the 15-minute chart real quick so I can count the levels going to the high. Interesting. Yeah, we actually see W formation level. Okay, let me bring it up a little bit more. Yeah, we actually have a W, a consolidation, and then we have 1, 2, 3, M, right? But now, in order for a big move to happen, the bigger the M and W, the bigger the move. So, and today was Wednesday. P formation hasn't crossed yet. So the next potential move most likely will be stop and high drop tomorrow. Or even next week. If they even consolidate here, tomorrow over the weekend, I won't be surprised if they do that. And then we should just react to what's given. But technically, the next initial move on GBPUSD is stop and high and drop. Whoa, I didn't expect that. Drop. That's a nice 500 pip move, What also makes this move so significant is the fact that we are once again at the institutional level. As you can see. So it makes sense why price will drop. I will also make notes on this, and well, yeah, I'll also make notes on this and send it to you guys. I know this one was pretty rushed, I know, but it's the same concept, just showing you once again the same thing happens over and over and over again, same pattern. I must still do a video on crash and boom. So yeah, but I hope this really helped you guys. I really hope so. Like, once again, if you have any questions, just let me know.